Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, and this is the 8th of October, 2024. What time right now, by the way, is about 5:45 p.m. Central Time. Now, one of the things we're going to be reading about tomorrow is that Hezbollah has changed its stance and it is willing to negotiate a peace deal with Israel what's going on in Gaza. They have apparently turned around with the new leaderships that Israel has taken out the old ones, and the new leaderships have agreed with the Lebanese parliament that this is about Lebanon. They got to worry about Lebanon as much as they care about their brethren. Maybe this is how they get a peace done. So my guess is, just a guess, that Israel would be foolish not to run at this, making sure that the treaty that was in place is adhered to. No more firing on the Israeli people that live on the border. Israel wasn't firing at them. Remember, that was in retaliation for Gaza done by Hezbollah. And probably a few other things, but then to pull the troops out. Look, Israel doesn't need to invade Lebanon. I think that's a given. And what a blow to Iran this would be, because what were there supposed to be 200,000 missiles there at one point? I don't know how many Israel's taken out, and you don't know how many. But a number have been taken out. But that would get rid of one of the proxies in the area, and it could really condense the fighting that Israel's trying to accomplish. Right now, Israel has to make a decision. And what's it going to do about Iran, if anything, all right? Israel's defense minister flew to Washington today for consultations about that. They'll do whatever they think necessary, but this has to be a big plus if it's real, and I'm hoping it is. A funny market today. We come in, and the Chinese markets were, as you know, on fire, and supposed to get another stimulus package today. Well, to make a long story short, China tried to do the same old thing that didn't work before, and they went back to that playbook. We'll say things, we won't do things. And the market punished, and I mean big time. Took down some of the Chinese stock indices 10%. You saw the energy markets crack hard, $3.5, $4. You saw the metal markets get plummeted. Copper market over here, it's back into the 440s from the 460 level. Remember that. The gold market, not 2,700, now at the 2,640 level, and you're under $31 in silver. So what happened? Well, this market's been running on air, as you know. The air being China's going to turn their economy around, all positives, good things. They're going to do it by having to spend a certain amount of money to get the people to believe, the consumer confidence goes up, and so on. The plan that was released this morning was more of the, believe us, we'll do things, it'll happen sometime next year. Take a pin, take the bubble, you took it out, and away you go, because this market had run up in iron ore, copper, and other markets on the idea that China was doing it and doing it in a way that people can believe in. This sort of just deflated it. They can straighten it out, but that's what did it. The interesting part was the U.S. stock market turned around and had a stellar day off the news, which is a big positive. We're trying to stabilize in the bonds and notes for a change. So is the worst of the selling over? You know, no one can pick a bottom, starting with me, but it's got that feel about it that it just might be the case. Let's talk about what we're going to be looking at in the morning. You're going to get mortgage bankers' numbers coming out. Well, we know interest rates have done nothing but climb, basically, ever since the Fed cut by 50 basis points. So I don't know how those numbers will do. Wholesale inventory data will come out at 9 o'clock. The Federal Reserve latest FOMC minutes. Well, everybody will be going over those, and that'll come out at 1 o'clock. The EIA energy stockpiles at 9:30. I want you to take a look at the API. They put in 10 million barrels, they say. Whoa. Prior week, it was down 1.46. Where'd all that come from? And I can tell you the EIAs are looking for a 2 million barrel increase. One of them is very wrong. I don't know which one, and we'll see how the markets want to react to it. All right, so let's take a look at some charts and get a feel for what the market's doing. In the gold, we're down 1.16%. And I've got to tell you, when I did my gold report, I think it was 3 weeks ago or so, we're getting the break now that was delayed because China changed things and they came out with their packages. Then the Golden Week came when they didn't have to say a word, as you know. And now we're into the third week and the game changed on it. We're now getting the pullback in the gold, and you see that especially on the daily bar chart. So everything's been delayed as I look at it. Lower highs, lower lows. The market's now under the 18-day moving average of closes. The next moving average for support's 24.94, so I always ask, where's the Bollinger Band bottom? And that's 25.91, about $50 away. That's the more attainable number if the market wants to drop than this number, in my opinion. But I wouldn't be surprised to see a battleground at the 26.52 level. In terms of momentum, you had ample notice when you lost the embedded reading here, this market was going to come down. I had been looking, and I kept saying it, and people would write me, well, where's your break, Ira? And I was looking for at least a pullback to the 18-day average of closes. We got it. The one thing that I did is I told traders not to trade. I didn't see any reason for the market to go short over the 18-day average. I'm developing a service for that, but right now, no. And there was no reason to buy. Difficult time to be in the metals. Obviously, with the plug pulled today, silver roared. But it wasn't a one-day roar. Let's go back. This is the close of business today. This is, let me get back if I could. This is yesterday. So yesterday, everything fine. I'm going to repeat again. Today, you take your pin in your hand, the balloon's up there, you hit it, and it burst. And with that burst, the industrial metals got smashed, silver being one of them. And now you're back to the game where, now what do we have? At this point, gold is a bit stronger than silver. When we take a look at silver, look what it fell to. We were just, you and I, talking about this yesterday. And here was the market, and I'm going to come to it. And I said, well, the first support in the market's the 18-day average. Go back to yesterday. And I said, if it lets go, well, this combination might be the supporting zone, the combination of the Bollinger Band and the 100-day average of closes. Kaboom. Do I think there's a lot left on the downside? No, I don't. Is it a buy here? It isn't, because you have a higher high and lower low, and you're under that average. Let it work itself off, but I think you're getting rid of all the problem. And the copper you pulled right back to where I would have thought. You lost your Bollinger Band back here. Let me just show you. This is what I teach in the Enhanced Bollinger Band course, and I know you think you have it. You probably don't if you haven't taken the course. You got to learn how to work with it and what to look for. Once you lose the reading, unless you immediately go up and take out the higher high, the odds favor you're going to go to the closest moving average. Now, that can change because you can get averages moving around, but that's where it should go. You're saying, Ira, you are so wrong, and I get it, but here's what it's doing for me. Even though the trend is up, higher highs, higher lows, I am telling my clients, no, you should not be a buyer. This is at work, and this takes precedence over all that. Market starts coming down. Just like I showed you in the other markets, I'm looking for this as the potential support. Kaboom. Now you get a bullish crossover, but you still have this embedded reading that has hit neither of those numbers, and I'm looking for that to occur. Now the game changes. So now I'm at the point where you've washed out the longs that got in too soon, taken the market down from near the 480 level, all the way back in no time at all into the 440s, 447 roughly. And now the market's going to start fighting a battle to determine where's the support level, which I think is here. Platinum's doing the same thing. I didn't look at the weekly chart before I did this, but given the break that Platinum had today, you may have even hurt the weekly chart. In the dollar index, we are up in an overbought condition at the upper Bollinger Band and now starting to spin our wheels. I look for this to have a lot of resistance between right where it's at now, the 100 to 200-day average. Don't pick a top. If the market gets there, I think the market began already with the pros starting now to be worried about the market. You have an outside day, if I'm correct, to the upside. So the arrow down should be actually an arrow up. Yep. Here's your warning sign if you learn how to work with outside days. If today's low is taken out, it's an excellent sign that the market is peaking out in this range and is ready to retreat. How deep we'll measure as time goes on, but that's what I'd be looking for in the marketplace. So that's one of the things that you might want to look at. Now, for those of you that use TradingView, and there's a number of you that do, we've put together a suite for you where you can get all my studies in the TradingView. You're going to get the indicators that I'm using here, the swing lines, the way that I do the slow stochastics. Outside days will be highlighted. All the moving averages that I utilize, the Bollinger Bands will show up in the suite. And you can modify everything because you got to modify the window envelopes that we do all the time. And of course, my slow stochastic formula will fit right in there for your stocks, your ETFs, and everything else. So if you use this, it's pretty simple. It's a pair that they call that, and it only takes up, I think, 2 slots. So it's very, very minor. It works with all my courses, by the way. And so if you decide to take the courses, you'll see this works right with it. So how do you get to this and what do you do with it? You go to iraepstein.com, and at iraepstein.com, go up to the client resources, very top right. You'll see the TradingView indicators. Click on it, sign up, and we turn it on for you the next morning, business morning. I'm Ira Epstein. You have yourself a great day, and I will talk to you all in the morning or later in the other videos I'm about to record. Take care.